Hey everybody, welcome to the video edition of Upstream Ag Insights for the week of February 6th. This week, going to touch on a few different things, and it'll be relatively quick. But putting in a new segment this week, question of the week. So I get a lot of questions, dozens of questions, comments every single week, and sometimes there's themes, and so we'll try and bring forward each week some of the themes from the previous week, and this week going to touch on a little bit of the biological market. Next, Greeneye Technology announced a trial relationship with FBN. Then Nufarm had an investor event this week, and so I'll just highlight my call it most interesting takeaways from that event. And then Matt Pryor of Tenacious Ventures wrote another interesting article called "Confusing the User with the Beneficiary in the Messy Middle." So I wanted to touch on that quickly. So the question of the week this week was from an individual that was interested in the biological side of things. And I got lots of questions and comments on this over the last, I would say, 2 weeks. And so just wanted to really extrapolate some things out. I don't know if I can actually give a good answer to this question. And so this individual has worked in the industry for a while and said that they find it hard to believe that the market is at the size reference, which is $10.6 billion annually, and didn't believe or doesn't believe that it's going to grow it at, depends on the market data you reference, but somewhere between 12 and 15% is kind of a general rate that's referenced. And so individual just asked if I had any other reports or anything to better understand. And to be perfectly honest, unfortunately, I don't have any access to any special reports or anything like that. I have access to, I think probably a lot of listeners would have better access to information than myself, but it's an interesting question nonetheless, just to kind of extrapolate out. And so what I did is I actually took the synthetic crop protection growth rate of about 3%, and then took the anticipated biological growth rate of about 12%. And again, you can find numbers that are showing the synthetic or the traditional crop protection products at 2 to 3.5%, somewhere in there. Biologicals, again, 12 to 15, but just picked some, call it to rounded off numbers. And used a compound annual growth rate calculator to just see when the biologicals would actually potentially pass the synthetics. And so this was just kind of my kind of starting point of interest. And at about $10.6 billion market of biologicals today, it would take about 21 years of a 12% CAGR to actually pass the synthetic or traditional crop protection market in about 21 years. So we're talking, 2040, somewhere in there. And that would be when each of these segments end up at about $114 billion market. And there's two flaws in this calculation, of course. And I think the first is just assuming that any market is going to grow at those consistent rates for 20 plus years. I think that's really challenging for one to see. But again, we don't really have it. I don't have a crystal ball, unfortunately, to really pull anything better out. But that's one of the flaws. The second flaw is if you actually look at the market size today between the biologicals and the synthetics, you're at about $72 billion annually. And so to think that the market would actually be, if you combine these two together, about $228.5 billion annually really doesn't make a lot of sense in the next 20 years, maybe well into the future. We'll see something like that. I don't know, but doesn't make a lot of sense at this point. So that really indicates to us that one or both of these are going to slow down in terms of their growth and how many acres they're on, that sort of thing. And so sort of just think about what you could do to extrapolate out what could this look like, what might the biological growth numbers look like. And I started to think about a concept called Parkinson's law, which I assume a lot are familiar with. And essentially it's the concept that work expands to fill the time available. So if you give somebody a week to do a project, they're going to take about a week. If you give somebody 24 hours, they're going to finish it in 24 hours. Just we kind of operate from that perspective. And so basically that's just showing that based on the self-fulfilling prophecy of, hey, I give you a week, you're going to take that. I started to think about, well, what about the actual self-fulfilling prophecy in the market what might we see with the biological side of things? So I started to look at the Thomas Theorem, which not my theory, different individual with the last name Thomas. Essentially, this theory states that if men define situations as real, they are real in their consequences. So essentially, if you forecast something, if you talk about something coming to fruition, people will expect it and then eventually make that happen. And so when we can look at this from the business side of things too, where all of a sudden, if you have a 12% compound annual growth rate of biologicals, all of a sudden we see this market research suggests that there's growth. It gets people interested in quoting it and talking about it. So you see startups and incumbents quoting it in presentations, talking about it to reinforce what they want to do or should be doing. This sets up more questions from individuals, customers, that sort of thing, which sets up more investment and marketing to really drive some of the awareness, to actually drive some of the outcomes of these potential investments. And then that ultimately sets budgets. And so you have companies that are then setting budgets of, we need to grow in this specific area by 15% or 30%. We want this specific product to grow at 90% annually, for example. All of a sudden, when those companies set the budget, they more or less hit them. I mean, obviously there's always misses here and there, but if you're targeting a 15% growth, you're probably not going to only hit 1% in the way our ag businesses tend to operate. They tend to be pretty strong at execution as just a general statement. And so ultimately this leads to the growth of the forecast. And you look at some of the dynamics going on in the ag space currently with biologicals, and you have like the UPLs and the FMCs really focusing in on the biologicals, because that can be an opportunity for them to differentiate where they are non-differentiated in the market today, trying to compete with the Cortevas and the Bayers and all these larger organizations. And so it really starts to make sense that you're going to have some focus in that specific area. But then you also start to see this from the perspective of, we have a lot of large publicly traded companies operating in the space, and biologicals aren't just a point of differentiation for the customer side of things, but all of a sudden this starts to feed into what we're hearing a lot on from, say, the BlackRocks and ESG investing, all these different dynamics. All of a sudden this biological side of things can start to fuel into the ESG budget hits. And so all of a sudden you're now differentiating to investors by investing in the biological side of things. And so it's tough to say exactly where this market is going to go, of course, but you start to look at the environmental trends. You start to look at this self-fulfilling prophecy trend, which, again, this is a little confirmation bias by me, full disclosure, is I went and searched for data on a self-fulfilling prophecy coming to fruition. And there's actually work that was done in, the Chinese stock market, where there was a bunch of retail investors utilizing different technology, and because of the expectations, they seen numbers grow. And so this actually checked out in a scientific peer-reviewed article. Again, that's a lot of survivorship bias as well too, because for every one of those examples, there's probably a ton where there was forecasts made and numbers that didn't get hit, of course. So take it for what it's worth. But when we start to look at the dynamics of the environmental trends, when we start to look at some of these forecasts, when we look at companies trying to differentiate, when we look at new business models that are going to be coming into play, it starts to make sense that we are likely to see a 12% growth rate continuously for a while. Now, does that mean in 20 years we're going to see a passing of synthetics? I don't know. What we're likely to see is probably passing in certain markets. So, I'll use the EU or the European market, where there might be some more regulations hindering the use of synthetics and traditional products. So biologicals might grow more there, whereas in the developing markets, we might not see as much growth, of course. And so just little things like that, I think, can help us to provide at least a frame of why we might see this biological growth actually occur. I've been a fan of biologicals for a while, and I think there's a lot of potential. There's still a ton of shortcomings, of course, in terms of the efficacy and consistency and all these different dynamics. But I tend to be bullish on technology, and so I do suspect we will continue to see some of this biological growth. Again, that might not happen for the next 10 years where we start to see things really, really take off, but we are likely to see the biologicals continue to grow based on my general logic of just kind of looking at some of these trends, looking at this self-fulfilling prophecy model, those sorts of things. So kind of an interesting just exercise to calculate out when will this, passing occur, if it is to occur, and based on these numbers. And so just thought that was a bit interesting for this week. Next, just going to quickly touch on a few topics. I'm not going to go in depth on any of these. I wanted to keep this a little shorter today, but the first point is the Greeneye technology precision spraying system is planning to be tested in the FBN network with their on-farm trial. So personally, I think it's a great move by both organizations. I think FBN doing that is setting themselves up to have a better understanding of how See and Spray and precision technology is going to work, how it fits in with their digital systems, how it fits in with conversations with customers, how it fits in with some of the products they're selling, how they can optimize some of the products they're selling to be used through that system. And so super smart on their end in my view. And same with Greeneye, they get access to the market, they get access to farmers. So works out really, really well from both sides, in my opinion. And I'm biased here. I've been I think anybody that worked with me in 2017, 2018, 2019 would have heard me talking about how the organizations I was at, I would advocate for looking at this technology, trying to understand and be prepared for it, because I think that it's something that will take off. And the sooner you start to prepare, the sooner you can start to arm yourself to either take advantage of it or be protected from some of the challenges it brings. So anyways, I think a lot of retails should be looking at this. I think a lot of ag companies should be looking at this, and many are, of course, too. And so just an interesting, strong announcement there from FBN and Greeneye. Next, the Nufarm Group actually had a 2022 investor event this week, and they came off some really strong news. I think they had a massive quarter, and their stock was actually up something like 25% this week. So really good news on the Nufarm front there. But I just wanted to highlight a few things that I took from their investor event that I highlighted in Upstream this week. And I think the first one is actually that they highlighted some of their pipeline, and they highlighted which aspects were biological, which were traditional chemistry, that sort of thing. And actually about 32% of their 5-year pipeline, so their pipeline out to about 2026, was actually biological in nature. So just an interesting stat, I thought there. One of the products that I found pretty compelling, just as a Canadian that has spent a lot of time in canola and with around oilseed rape type of crops, is they actually have a pod shatter reducing biostimulant in their pipeline, which I found pretty compelling, and also fits pretty nicely into their seed lineup. They have about 7% of their revenue nowadays is from their new seed technology line of business. And so I just find it interesting. Some of these products can really be synergistic to their whole portfolio and other areas of their portfolio. So interesting there. And I think the last thing on them was about 6.5% of their 6.5% of their business is considered sustainable products. And again, how companies define sustainable is going to vary, but regardless, it's interesting to put that into context where I covered UPL last week and wrote up about them. And actually about 7% of their business is biological, and about 29% of their business is considered sustainable and differentiated. So interesting contrast there. And what I noted when I was going through the Nufarm information is that you kind of have the FMCs and the UPLs really emphasizing the biological side of their business, really emphasizing the biological pipeline and portfolio and R&D going into that. And you get that a lot out of the Cortevas and the Bayers. There's still some of that, but it's to a lot lesser degree, and probably rightfully so, where you have these large incumbent organizations with billions and billions of dollars in revenue from traditional chemistry. You can spook investors talking too much about the biological side of things, whereas UPL and FMC, that's a lot of upside when they start to show the rate of growth, as I alluded to earlier, how strong they are in that. And so that's kind of a big opportunity for them. And Nufarm would probably fall into the same sort of situation as FMC and UPL in terms of it being an opportunity, but they emphasize it a little less. And in terms of that emphasis being a little less, it's showing through in that they're probably not quite at the same sort of level of business as a UPL is in terms of the biological and sustainable front. And so just an interesting note, because Nufarm and UPL come from similar places in a lot of ways, in that they're primarily or in a large part a generic manufacturing organization, but they've now both started to try and move more in a tech-driven way into a differentiated and proprietary product way, and just appears that UPL has maybe got a bit more of a head start there, but they're also a larger organization in general. So, anyways, interesting note there. And last is an article by Matt Pryor. So he titled it "Confusing the User with the Beneficiary in the Messy Middle," and he highlighted this in his article, "The Messy Middle," that he wrote 2 weeks ago or something like that. And I really liked it, and I highlighted it and talked about some ways that organizations, ag tech startups and companies can get through this messy middle, talking about being relevant, being differentiated, being consistent in that, which is more general kind of commentary. And I actually like what Matt did, is he was a lot more specific and prescriptive, and I think much better than the comments I had. And so he actually started to talk about focusing in on the user versus the beneficiary and understanding who's who and why. And he highlights this one aspect that I really like. And he says, you can often engineer a business model so that the beneficiary subsidizes the cost of the product for the user, enabling faster and lower friction growth. And so if we look at the ag tech landscape today, a lot of the business models are based off of, I use a farm management software and I charge the farmer $1,000 a year or $4 an acre, whatever it is, or you have a sensor put into a field at the cost of $1,800 a year or $2 an acre, whatever the numbers are, but it's going directly back to the farmer, and the farmer can benefit a little bit, but there's also a lot of beneficiaries in the rest of the value chain, whether that's the retailer, manufacturer, downstream processor, or what have you. And so when you start to look at the complexity of the value chain in ag, it actually starts to open up that, hey, you know what, you can get creative with business models. And when we start to look at the dynamics of the value chain, we can actually see that there's a lot more dollars that are actually accrued upstream in the value chain. So there's a lot of course, higher margins at the manufacturers and that sort of thing. But then there's also this dynamic where if you look downstream, quality parameters, risk management, all these different aspects are very, very influential on the dollars that are being accrued by processors or food organizations. And so when they have an incentive to offset the risk, and that can be supported by digital capabilities, or there's quality parameters or consistency parameters built in, or just having an understanding of when product is going to be coming to them, there's value there for them. All of a sudden, you can start to target them as an ag tech company to show the value of what your product does. And now the user is the farmer, but the beneficiary is definitely the downstream group. And so you can start to get them to subsidize some of that cost or all of that cost, depending on your business model. And so I think that's some of the dynamics that Matt's starting to get into here. And I think the other aspect and the last point that I'll make in this video is it's also important to understand who influences that purchasing decision. And I think that's something that's important in agriculture. There's independent consultants, there's retails, there's a whole other schwack of different groups that are influential to the farmer. And you need to understand who's influencing them, how they're influencing them, how they're incentivized, why they're protective or want that relationship, don't want that relationship. All those sorts of things are important to really drive a strong go-to-market business model. So again, not something unique to ag necessarily either, where we see in children's toys where you get the kids are the target, but the customer is the parent, because the parent's the one paying for that toy or whatever it is for the child. And so interesting dynamic. And I think there's lots we can learn from other industries to start to pull that into agriculture, start to pull that into the business model, so that we're not $5 an acring the farmer to death, as I've commented before in Upstream. And so anyways, lots of interesting news this week. That's some of the highlights from me. If you have any questions or comments, feel free to send them my way. Like I said, I'm going to start doing the question of the week moving forward. And so if you have questions, if you have something you want me to talk about, let me know, and happy to bring it up on the video and hopefully start some more conversations about different things going on in the industry. So thanks again, and hope you all have a great week.